Alright guys, this video is going to be about the writing of profit and loss statements. So this is the next and one of the biggest things that we're going to have to be doing in massive small business. The purpose of a profit and loss statement is to calculate and show a business's gross profit and their net profit. So their net profit being their final earnings after all expenses have been considered. And don't worry, it's going to be long, but the maths involved is simple, just addition and subtraction. The only hard thing is remembering everything you need to include, okay? And you'll see from here, there's a lot to include. And the questions are quite long. So, the first thing, before we head into the example, which will be a long thing, is showing you how to set everything out. I want you to set out your calculations for profit and loss statements just like this. Just like it has in the book, but the book doesn't explain what to do. So, the first step would be your gross profit calculations. And this includes the sales, and then all the numbers that you need from the question that are involved with finding the cost of goods sold. Because what you're trying to do is go take the sales and take away the cost of goods sold, and that will give you the gross profit, which you'll write to the side. The next step is to look at the question and work out if there's any other revenue sources other than selling the items that the business is trying to sell. So this can be fees earned, commissions earned, any interest received from, say, a bank account that they've invested money in, dividends earned from the share market, or rent earned that if they own property and they're getting money from people renting that. So you add all that up, and that is considered the total of all other business revenue. So that's revenue that's not coming from selling their goods, which is worked out up here. This other revenue is the total of all the other sources of money that they can make. And after that, in red here, and don't think you need to do all this in color when you're working out the questions. I'm just doing it in color to help separate what's money earning and what's money losing, which is expenses. This section here is the total of all the expenses, so adding up all of the business's expenses, their costs. So this would be paying wages to their workers, paying rent for their location, insurance they have to pay, just like work cover, rates and taxes like council rates, utilities like electricity, water and gas, their advertising, and any depreciation of their equipment. So remember that we have said the cost of a capital item can't be an expense. The depreciation can. So you add up all of those expenses and you get total expenses, and right at the end you have the gross profit, which is up there, the total of the other revenue. You add those together, you're going to add them together, and then the total of that is sort of the money that's coming in. Then you take away the business's total expenses and you will have the net profit. And that is the purpose of the profit and loss statement. So, we're going to go through an example. Hopefully I've got enough space. And the first thing that I suggested to my students last year was to actually color code the example question. Because as you can see, there's so many different elements here. And you're going to be looking back and forth, trying to add them to your calculation. If you color code them or put lines under things that are money earning and things that are money losing, expenses, then it can make it easier for you. So let's have a look at all the things that will need to go under the gross profit calculation and other revenue sources. So money earning. So sales is one. That's how much money they got from selling all their goods. Wages will not be one. That's they pay to their workers. Rent is not. Insurance not. Rates and taxes not. They received money from interest. So that is going to be an other revenue source. Opening stock is used to calculate the cost of goods sold. So that goes under blue. Purchase of stock is also used to calculate cost of goods sold. And closing stock is another element that goes to calculating the cost of goods sold, because we're trying to take that away from the sales. So we can start our calculations now. So the sales were 33 $335,000. And we're trying to take away the cost of goods sold. And the cost of goods sold is the total stock available, which is opening stock of 138,000, plus the stock that they purchased during the year, which was 99200. So that's going to be 237,200 goods available for sale, or to sell, to make it shorter. And then they ended up with a closing stock of 116,590. So to work out cost of goods sold, you have to subtract that from their goods to sell. So 237,200 minus 116,590 should give you 1,206,10, which is the cost of goods sold. That's how much it cost them to sell the stuff that they sold during that year. And then you can work out the gross profit now, which is going to be 335, the sales, 335,000 minus the cost of goods sold, 1,206,10, and that is going to be 214,390. So a gross profit of 214,390, and I've suggested that you put it off to the side. So I'll put that here off to the side. Gross profit 214,390. Now we're going to be totaling up all of the other revenue sources. And if we have a look, the only other source of revenue that they've had was the interest received. So they haven't detailed exactly what that's from, but we could assume it's probably a bank investment or some sort of interest earning account. So we can do the calculations for that. Well, there is only one calculation, so it's going to be total other revenue is only the $1,000 interest they earned. So we can put that straight up there. As the other revenue. We've got lines under there of 1,000. So that is their earnings, considering the cost of goods sold. Now we get to the expenses. So now you have to look at the example, the question, and work out what are the costs of the business. What does the business pay as expenses to keep itself running? The business pays wages to its workers, that's an expense. The business pays rent to stay at its location, that's an expense. They pay insurance, that's an expense. Rates and taxes, that's an expense. Those are all blue. Electricity, that's a utility, that's an expense. Telephone connection, that's an expense. Their depreciation of equipment, like before, that was the first expense that we talked about, so it must be an expense. Advertising of 4445. And interest paid. So they earned some interest, but they also paid some interest. So they must have been paying interest on a loan or something. So we have all of our expenses highlighted. So the purpose of the next bit, which I'm going to do in red, is just to add up all the expenses. So that's going to be wages of 98,500, rent of 22,500, insurance of 6,675, rates and taxes of 2,400. Electricity of 1900. Telephone. That's an expense of 1235. Depreciation, or shortened DEPR. Depreciation of equipment 3480. Ads and promotion 4445. And the interest they paid, interest of 568. So if you total that up, total expenses, that's going to be $141,703. So you also, again, you have the element that you need to put on the side. Total expenses of 141,703. So now, to work out the net profit, we have to add the gross profit to the total of other revenue, and then take away the total expenses. So we can move over here, and usually it's suggested in the book to do it vertically, but I'm just going to do it on this side because we have all of these elements all together on the one screen. And I'll do it in green. Your net profit is going to be the gross profit, 214,390, plus $1,000 in the other revenue earned, minus 141,703 in total business expenses, and that should equal 73,687. So after all of that, we have worked out that after we've worked out the total business earnings, after you've considered the cost of actually selling the things that it gets profit on, then adding on its other revenue sources, then taking away all of its expenses to keep itself running, it actually only earns this much profit. So that's a fair ways off what you would initially have a look at when at the end of the year you would look, oh, we sold $335,000 of stuff. Yes, but it cost you this much. It cost you $120,610 to buy those things that you were selling in the first place. Okay, and then it also cost you all of this just to run your business. Okay, and even though you earned another $1,000 on the side, in reality, when it all comes down to it, this is the real profit after considering everything else, and that's what you would be taxed on. So that is profit and loss statements. Hopefully that's helpful. I know it's long, but the maths is not difficult. It's just remembering all of the elements. Hopefully that has been helpful to you. And I will see you guys in the next video. Mr. T out.